Good morning, all. Hope everyone's had a great evening. It is January the 6th. Welcome to our overview of what's happened overnight. Well, after yesterday's bloodletting, after the Federal Reserve has came out with their minutes, much the same as what they said, but there was at the actual meeting. But the most point coming out of it was more an emphasis on increasing the speed of the taper and perhaps increasing the number of tightenings up to 3. It was expected at 2, and it's as early as March. From that, overnight, the US 10-year has reached a higher 1.75%, 175.30, and that's the highest level since March 21, last time this happened, almost a year ago. And with that, the yields across the curve are higher. As far as the stock market goes, we are down further on fair value on the Nasdaq, and as you can see, volatility is down a tad. But also, let's have a quick look at the Dow is actually up a little bit as well. The other big mover overnight is oil. Is up over $2. Main reason that started yesterday was because of Kazakhstan. The Russians have actually moved in, and that's a big exporter of oil, mainly to China, and copper is also bid because of that as well. So remember, there's also a shortage at the moment in Libya. We did have the EIA out in the United States yesterday, and we saw oil pop after that. That was a draw, but as expected on oil, but a big build on gasoline. That was a lot to do with tax assessments, i.e. cutting the crude oil inventory. That's how you do it. You produce. And there's a good, just follow our around the barrel that's out every week on the website there. Gold, interestingly, hasn't reacted positively to this, as we said yesterday. It is now under 1,800. It's down another $18 now at 17.91. Silver's down 69 cents. And Bitcoin continues to go lower. It's down at 72,000, under 70. 43,000 at 42,914. In Europe, we're down. Remember, that's been up every one of those, but not unexpectedly, they're all down. DAX is down. DAX and Italy and France are all down over 1%. Spain and England are down around 0.4% as far as that goes. So we're now, actually, I haven't seen anyone who's bullish. There's a lot of fear bombs out there. So I'm not sure if we're in the buy the dip mode, perhaps. Let's see what change. At the end of the day, if you stay back, the worst case at this point is 3 basis point rate rises by year end. The big thing's taking the liquidity out of the system. When you read, though, how much Omicron is actually just affecting everywhere in the supply chain, and most of the inflation is in lieu of that, it will be interesting if they can do it. Perhaps much of what's going on is Powell trying to change the narrative, say, hey, we weren't behind. We're on top of it now. We were waiting and seeing. We will see, and if that comes more into being, should it slow going forward. All we read about is how bad it is. Of course, there's every second conspiracy theory popping up, as you do in these sort of situations. But in reality, let's very clinically talk movements as far as technical analysis goes. I've got oil up there. We're going to start off with that today. So recall yesterday, this is our 10-minute one, so you can just see what's gone overnight. But recall yesterday we broke up on EIA, we fell back and we held this support overnight with pictures of tanks rolling through and perhaps a little bit safe haven buying, if that makes sense. We've seen that before when stocks fall, gold's falling, bonds are falling. They go to, and this has a geopolitical angle to it. So we've seen that run up all day, all the way to R2. The high right now is R2. So it gets above. So, that's obviously some machines have got short up there. Let's see if it holds. If we were to look at that daily, again, a lot of these moves are very clinical. Remember, it got through the twist, and what held it right at the close initially was a nice sell off the 50. Came down to that previous high yesterday. If you look at the market wrap we did yesterday, and that's where we held. And we've rallied once we broke that. So that's a good couple of dollars right there. If we look at the hourly, we can see what's happened. This was just picture. Remember I said yesterday, I think it was NASDAQ gave us a bounce yesterday before the collapse. The first run at the cloud, look, it gets mistaken, this downtrend. Because if every downtrend broke, you'd never get an ABC, right? So we had a test of that, and we broke through. Remember those highs we're watching? They tested, that was that motor break. And your buy there, see how the Cajun actually came out as the same level? And now I was talking about if it had the power to hold, you got a good 2/8 move at least on Murray, which is what's in play right now. So that's your oil. Keep your eye on the what's going on there. And that just reinforces supply crisis. So if we move over to Natty, nothing much there, just model switching. See, we're just sitting still in this big pennant on the daily. We don't need to dwell too much. The EIA report is out for natural gas storage today. So we'll keep an eye on that, obviously. If we were to look at this on the longer term, or the longer short term, the medium term, hourly, we can see again, it's just flirting around as these models come out. And a very thin market overnight, the US natural gas. So nothing really to see. You can see spikes both ways. If you look at the time, that's when there's weather models. So without further ado, that's our natty gas. As I said, it can't even get, well, yesterday for a second it got outside of that 2 band on the 10-minute. Okay, vol, if we take a look at that, let's have a quick change that chart over there to the Russell for us, eh? So I'm noticing Apple's down at 173, so that's almost $10 from that triple, the 3 trillion, the triple trillion. Oh, hang on, different here. So I got to put in. So if we talk about that for a sec, that is just shows you how everything got one way up there. As far as the Russell goes, but that's kind of typical in a major buy the rumor, sell the fact. Perhaps it wouldn't have been like this with the Fed. Perhaps that event even caused it more. So on Russell, this is 5 minutes. Let's bring it out to 30. We got the same pattern almost as the SPUs, right? And look at NASDAQ, it's bounced. If I'm looking at that, yeah, it's bounced about 100 handles from the lows. The S&P has bounced about 20 handles off the lows, and the Russell's bounced 20 as well. Apple, as you can see, has just broke that top of that cloud. So that's the key, is how it reacts. So like Murray Math, how it reacts, right? Here's what probably caused a lot of surprises when it took off here, but once it broke back through that 50, 240 is a good time to look at. And remember, that was all overbought, plus 2H wasn't too hard. So there we have that. So what's our daily? Remember, that Tenkan is just such a good view of what the trend is. But we recognize what was going on here. With that spike, we got out of whack, out of balance, and we put in that little trend. So that was your good sell. And you don't have to get the top, but that's a good 60 handle move right there. We've come across the 7/8. Is that white line there. And as I said yesterday, it held the 50. So it did get some resonance off there. You've got your support here, Cajun, and really we'll see if the Tenkan comes down to meet it as far as that top side resistance goes. Hourly, if you look at hourly, you do have a little reverse head and shoulders, which is interesting. Tenkan's your support pretty clearly. We're in kind of no man's land Murray-wise. Fortnight, we have the flat Cajun above it. And so we look at what crowd vitality. Obviously, everyone's end of the world. In reality, we haven't moved too much. A lot of that's wishful thinking. But I also see a lot of the so-called furos, I think it's a word, or experts and everything that were very bullish just a week ago. And just think of some of the stocks, how much they've reversed, and now extremely bearish. So use watching the herd. Don't ignore it, but watch how that goes with the waves in your trading. As I said, since November last year, I personally got rid of every little thing that they now call growth, but anything did make money, and the only stocks we hold on to are banks and a few others that pay dividend of that ilk, like commodities and stuff, oil, because of the risk way back then. So I think someone asked me that question a while back. And yes, a little bit ridiculed on the way up when I stopped buying some of that stuff maybe 5-6 months ago. It just took me one SPAC to get hurt on. So think of that, listen to what you make, and don't listen to what other people say. Those same people are all in that, and now all preaching we're going to be destroyed. Keep common sense in your hand. To put it into perspective, we are only 100 handles or so for an all-time high on the SPOOs, and we have a job number coming out tomorrow. Okay, we have a slew of numbers just dropping. Before we have a look at that, the yen was the strongest. Remember too, that was a good indication where we looked at that yesterday. It went up to what, 116.50, but it didn't carry on to the dollar didn't get higher than where it opened yesterday, despite the higher interest rate. The Aussie is the weakest. We know why that is, commodities, right? So that's also a good factor of that. So the jobless claims came out a tad higher, at 207,000 versus 198. The trade balance for the US was another, I think this is probably a record, 80 billion versus 77 billion. And that's up from 67 billion. What's interesting, that's in a supply shortage, i.e. we're not being able to import stuff. Well, we obviously are, because imports are up 4.6%, exports are only up 0.2%, services, that's our positive part of our trade, was up 18 billion, but goods was minus 98, and we saw that earlier, was 98 billion deficit. So this was under I think the record was in September. I could be wrong, but it was higher at 81 billion. So ever since over the policies have been a disaster, obviously on a trade point of view, but there's also been a bit of bad luck thrown in. We keep getting told, but however you want to look at it, this is quite incredible, the erosion in the US terms of trade. Now, what I find also interesting, the US consumer, because we import more, is spending an incredible amount of money right now, or has been. Now, if it's a supply chain issue, then it should be restraining it, right? So that's interesting. Let's look at that. I'll look at a little bit that more in depth. Canada actually came out with a bigger surplus than expected, 3 billion versus 2 billion. That comes out usually at the same time, and that's up from just over 2 billion the previous month. I haven't looked at the breakup or what makes that up. So significant. We also have later in the day factory orders and ISM services, as we talked about. Okay, BBY, Best Bed Bath & Beyond had earnings. They were down, but last I looked, they were going through higher. They were down at 12, I think. Last I saw was 14. Anyway, they were disappointing, and they had disappointing guidance. There's a report that Warner Brothers, or Warner Media these days, and Viacom are looking to sell their CW network. I think everything else we're pretty well talking about. Walgreens was out, WBA, they're also in the Dow, after posting better than expected earnings. And we have more data to come out, as I was mentioning earlier. So you got your levels there, keep it tight, and they give you a guideline at least of what to expect. So you can see how this stuff actually works. So it'll help with your trading there, particularly when you get a lot of people flipping to populist opinions, I guess you would call it. We talked about the 10-year is up again, and it's pressuring that trend line. A lot of talk that 2% is a fait accompli on 10-year yield. We still actually haven't started tapering yet. So just keep all that in mind if something goes the other way. So just trade what you see, and with the order flow, keep it in front of you. Let me see if there's anything more overnight other than the oil that we should be more looking at here. So here we have the Eurozone's November PPI. Remember, that's a month back. It's 1.8%, the PPI versus 1.2 expected. Big thing is that's 23.7 year on year. Again, these are also affected, and it never gets mentioned, by the fact that everything went into negative for over a year with the shutdown of the world. There's a report that Crédit Agricole, the French bank, is offering to acquire Italian lender, Banca Carige. And that's pretty well. Well, here's a little one, a tip here that could be something to happen. The French government reportedly looked to loosen the Eurozone's fiscal rules during the country's 6-month stint at the helm of the European Council. So that kind of sounds to me like they're getting ready to allow loosening or printing of money, however you want to put it. Okay, so there we have it. There's your levels. We'll go out with oil. Keep an eye on that. We are now pressuring $80 with 79.70. Keep an eye on that shorter term grid. We know where we are daily. We went pretty well clear on that. And you can see again where that is. Now here's some thoughts on that. Just think about it. We talked about this yesterday. The SPR has been used. We have the US, who's one of the biggest producers in the world, mainly via Texas, and a government that's basically against that. Then go begging towards Russia, OPEC Plus, which is Russia and Saudis. And then you got that same government pressuring Russia over Ukraine. And then you've got overnight Russia going to try to quell the situation in Kazakhstan. Remember, Chevron's one of the big players in Kazakhstan as well. So that's kind of the mess we're in. And that's real. And yes, and there's a lot of misdirection going on, perhaps also by a lot of these policies. The January 6th thing, which is today, all these things are redirecting probably where you should be looking at what's going on with energy, and I'm not just talking about as a trader, but populace, what's going on, the total mess that's Omicron, etc., and the fear with everyone being tested, etc. And so that's pretty well it. You've got everything coming out. That's also all on the website. So have a wonderful trade smart. Remember the big jobs numbers out tomorrow. So there'll be a lot of positioning for that, for those to probably get flat or take a position with a view into that. Obviously, if it's more along the lines of the ADP report, which was a huge beat, that brings forward even more aggressively potential on tapering and rates. Last I saw, it's like a 75% on that CME Fed tool of raising, first raise in March. So that's what's going to be interesting on the jobs report. Good is bad situation, right? So anyway, have a great day. Follow us on socials, Traders.com, like and subscribe. Thank you.